All right, we're back with Buyer Bootcamp. We got Dana, the beautiful Dana Fox,
Hi.
here telling us all about the money. She's with Lake Michigan Credit Union. She's been in the mortgage business a long time. Let's talk about some of the products. The phones are ringing off the hook. That's good. Let's talk about some of the products that people can look at, what things that are going to be out there. Because as a realtor, I hear of a ton of different products. Which one's going to fit me? Which one's going to fit my client? And that's where I give them to Dana.
Yeah. So, first thing that drives our product selection is going to be credit score. Alrighty? So that's going to be one of the first things we look at is your credit score.
Let's back that up. What's a product? What's a mortgage product?
Okay,
for
perfect.
example.
So FHA,
Okay.
VA.
Mm-hmm.
All right. I'm sure you've heard the terms Fannie and Freddie.
Mm-hmm.
Fannie Mae, Freddie Mac. They are the basically the government-sponsored entities, and they back the 30-year fixed-rate mortgage. All right.
Okay.
So Fannie and Freddie make the rules. All right.
The
So
government
that's a
makes the rules.
conventional mortgage.
Okay.
All right. So we've got FHA, 3.5% down. All right. So FHA, 3.5% down. FHA is very forgiving on credit score.
Yeah.
So sometimes when our credit isn't really all that it needs to be, doesn't mean you can't get a mortgage. It just means perhaps we need to look at FHA as a product.
And the
Okay?
3.5% down, that's the purchase price of the house. So on a $100,000 house,
It's
$3,500. That's all that 3.5% is, and that's part of your closing cost that we'll get into.
Yeah. The nice thing about FHA is you can use up to 6% seller concessions
Nice.
to cover your costs.
Mhm.
And that's where Andy's going to step in. He's going to negotiate for you, and that's a beautiful, FHA is a beautiful mortgage. Conventional, which is your Fannie and your Freddie, you can do as little as 3% down. Okay? Little more stringent on credit score, but conventional is also a beautiful option, and that's basically where most people end up is in a conventional mortgage.
Yeah. So when you say, okay, now we got two products here, and then the credit score is going to determine those products.
Yes.
At what point is there a level where you go from FHA to conventional?
There can be. 620 is going to be your floor, all right, on both FHA and conventional.
Mm-hmm.
But also what comes into play are called debt to income ratios.
Mm.
And so FHA is a little more forgiving on debt to income ratios. Debt to income ratios basically are how much debt you have versus how much income you've got coming in.
Yeah.
Okay?
Yeah. That's like if I have $2,000 in bills and I'm making $3,000.
Yeah, you're done.
Yeah, exactly. So we need to get it
Yeah.
in a position where our budget
Yeah.
reflects our income to get our
Right.
credit scores right.
Right. Then we have the beautiful VA mortgage.
Mm-hmm.
All right. For those veterans out there, you all know that is zero down. Did you know the VA loan is the best performing mortgage there is out there?
Well, that's good.
Yes.
They deserve it.
And so many veterans don't take advantage of the VA mortgage. So that's a beautiful, beautiful product. Other products that are available, RD, rural development. That too is zero down. Now, with RD, that is location specific. It has to be in a rural area. You can ask me about that, I can let you know. But also with location, there's also income limits on the RD, okay? We also have another beautiful product called MISHDA. And that also offers zero down payment. It's actually a second mortgage.
Okay.
And it's a silent second. So that when you refinance or sell that home, that second mortgage has to be paid off. All right? That we can run in conjunction with a conventional or an FHA. So you could do MISHDA conventional 3% or MISHDA FHA with 3.5%.
And this is why you need a professional in the mortgage industry. Because what's going to happen is once you tell Dana your story and you start going through some of these products, she's going to align you and help direct you to the correct product for you that's going to be the most beneficial.
Yes.
Right? And that's where you need some experience and you need somebody who can really provide you as an asset, and that's not going to lie to you. She's not going to say, here, we're going to get you on this loan that's 3.99 right now when we're doing this video. Interest rates are around 4.75, just depending, somewhere in there. She's not going to lie to you and get you into something that you signed to then deliver a different product.
No.
What we're trying to do is develop a system that's really functional and works. We're honest. We want you to understand this to a point. The thing is, we don't use this every day. Some of this, it takes years to learn, right? The good news is, okay, so now you know there's different products. Now what the next step is, what's the credit score? What's your debt to income ratio? Which product are they going to align with, right?
Exactly. So let's talk about interest rates. So let's cover that.
All right, stick with us. We'll go into interest rates. This is getting